lender. He's right there at the top. So we've enjoyed a nice relationship with them over the years. Done probably 50 to 60 504 transactions with Somercor over the last 3 or 4 years, and been a very active, 504 lender in the McHenry County, greater Chicagoland area. Wanted to tell you guys a little bit about the bank this morning and then my role and Dan's role. But again, American Community obviously is mostly a commercial business bank, dealing with small to mid-sized companies around the Chicagoland area, but focused mostly on McHenry County. My role at the bank is senior vice president, and I manage the McHenry County commercial team. And then Dan is one of our longest employees at the bank. Started back in the early days when the bank opened in 2000, and been running a commercial book, managing hundreds of relationships for the bank for going on 20 years now. So Dan and I would be your point of contact if you did have opportunities for 504 lending. And Dan mostly is out in the community chasing deals just like the rest of us. Again, great longtime lender here, tons of knowledge. I'm going to turn it over to Dan now, let him tell you guys a little bit more about the history of the bank and then some of the non-SBA services we offer. And then after he's done, we'll turn it over to Brian to give you some updates on the 504 program.
Good morning, everybody. Happy Friday. Thanks for joining us. Appreciate it. Those pictures are Mark and I's and Lander's pictures. We got to update those. So as Mark mentioned, we started putting the bank together in '99, and really with the focus on business owners, their families, and the business investor. So that certainly is what a lot of you folks are dealing with every day, the investor on real estate or the business owner as they're expanding. We opened our doors in March of 2000, so we recently just celebrated 20 years of business banking, which has been wonderful. And I think what has set us apart and continues to set us apart is just that the bigger banks are getting bigger and the smaller banks are going away. So we're right in that nice niche here where we can maintain close contact with our referral sources and clients and also have a lot of money to lend. We're growing and want to get money into our community. I would highlight here, we have 4 locations in the county: McHenry, Crystal Lake, Woodstock, and Huntley. And then in January, we opened up a loan office in Elk Grove Village. So we see the opportunity to expand into the suburbs and into the city. We've hired some key people to work for us that know that market very well. So long story short on the bank is that we've been around for 20 years, plenty of capital and money to lend. And we're good not only in McHenry County, southern Wisconsin, but down to Elgin, Elk Grove, and into the city. So any deal that you guys are running across, we're more than willing to go meet and chase and see if we can help you out and get it done. I'll just briefly highlight here, as banking has changed, and certainly with COVID that hit and lobbies being closed, we remained open through our drive-through the whole time. But there's so many tools that people are using today that they don't even have to come to the bank. So online banking, bill pay, a mobile banking app to manage funds, remote deposit. So a lot of our clients who are even in 5-10 minutes from the bank, we put a scanner on their desk, hook it to their computer. They're sending their checks in remotely through a scanner and remote deposit. ACH and electronic payments have taken over, really. Checks are going away due to check fraud. That's been on the rise for the last 2 years. So companies through our bank can do things electronically and securely. We'll mention as well. We invest a lot of dollars in security for our clients' dollars. I would mention one other thing on the cash management side, and that would be something called Positive Pay, and that's a software that will help prevent fraud, check fraud on people's accounts, on our clients' accounts. So the bank is very mobile, very electronic, very secure. The other thing, I guess, just the last thing I mentioned a little bit before, we certainly do these 504s and real estate, but we do all types of lendings, from lines of credit, equipment loans. So your business owner who wants to buy a building and needs to finance equipment to go in there, or they need a line of credit for working capital, those are all things that we do on a regular daily basis. So bottom line, we're active, we're a good partner, and we have money to lend.
One quick thing I'm going to add about the bank that's not in the slides is, Dan touched a little bit on it with the size of the bank, but all of our decisions are still made locally here in the county. So if this was a quick close type of deal, myself, Andy Hartlieb, our CEO, and then Rick Francis, typically if we have a full financial package with loans under $3 million, we can get those approved within 24 to 48 hours. Again, so all those decisions are made right here. If the loan size or the loan package project were to be over 3 million, upwards of 17 million, we would go to our local board, which is comprised of, local attorneys, accountants, doctors, other business owners, real estate investors in the area. And then projects over that legal lending limit of 17 million, we partner with Quad Cities Bank. And so we've done deals in excess of that amount, and where we just facilitate and own part of the note and then sell off the other half. So can accommodate some very large projects. And then to touch base on our current financial state, to Dan's point, our balance sheet is about as strong as it's ever been. You guys probably all remember the Texas ratio back in 2008, 2009, where some banks were upwards of 100% Texas ratio. Our number kind of peaked out there at 23, 24%. We're down to less than 1% on the Texas ratio today. So, and then at the end of June, we had our first quarter since 2008 where we had 0 delinquent loans over 30 days. So again, the bank's loan portfolio is in good shape. Like Dan said, lots of liquidity to lend. So we are actively looking. With that, I'll segue into our relationship with Somercor and introduce you guys to Brian. I've been dealing with Somercor for, it's got to be close to 15, 16 years now. They've always had great lenders. It's been a great organization for us to partner with. I've been on their loan committee for just under 7 years, looking at deals for them all throughout Chicagoland. It's interesting. We get to learn a lot about what's going on in the marketplace, and Somercor has been a great partner to us. So with that, I'll turn it over to Brian Comiskey, and then he'll walk you through some of the updates with the 504 program.
All right. Thanks for the intro, Mark. And thanks for the invitation to present to the group. As you guys can see, I'm outside. I'm actually visiting my son in Boulder, Colorado. So if I get attacked by hornets, bees, or you hear garbage trucks, that's what's going on here. And it, as we were talking about before, it's nice with all of us having to adapt to technology and the lack of in-person meetings. You kind of see how quickly we can move to be able to do things like this quickly and remotely. And to me, it's pretty exciting with the technology and just doing things differently. So a little bit of background on myself and the company. Somercor has been around since 1992. I've been in the industry for 25 years, working at both the big 504 shops in Chicago, Somercor 504, and Small Business Growth Corporation. Somercor is the largest SBA 504 lender in Chicago. We've done over 1,600 deals, representing about $3 billion in total project financing, created 24,000 jobs. Next slide. That was fast, Jim. Good job. Benefits of the 504 loan program. Typically, this evolves. I mean, I've been doing this for 25 years, like I've said. So I've been through 1998, long-term capital management, Russia defaults, Y2K, September 11, financial crisis, 2008, 2009, COVID. And the benefits really kind of move around depending on the market. The primary benefits are the borrower is able to put less money down, typically 10% compared to a conventional deal where they're putting down 20 or 25%. And then the other benefit is the interest rate. They're able to get a 25-year fixed rate loan. Currently, the interest rate's about 2.4%. We also do a 20-year loan, and that's about 7 basis points lower at 2.34%. In light of COVID, the benefits of 504 loans now kind of evolve a little bit. As we're in a period of price discovery with assets, there are a lot of banks that are tightening their credit box, and deals that would have normally been done conventionally at aggressive advance rates, for example, like healthcare, we're starting to see those deals. So I think what's happening with banks looking at risk differently in light of COVID and the price discovery on assets, we're seeing a much larger percentage of the market and the deal flow out there. In the past, our biggest struggle would be incentives at the bank level, and not really with American Community Bank. American Community Bank always had the attitude of, we're going to do what's best for the customer, we're going to do what's best for the bank long term. So the bank, and I go back with Rick and Andy 25 years to Amcor Woodstock days. So, I mean, their idea about helping out the business owner and their mission has always been the same. And the 504 really works for that, where a lot of other lenders would be more production based and maybe do what's best for the bank, but not what's best for the customer. So, you know, we appreciate that partnership and the bank kind of having a mission along the lines of what we do. Next slide. So typical structure, borrower puts in 10%. If it's a special use property or a new business like a gas station, car wash, I'm not even going to use the word hotel right now because I don't think anybody's touching a hotel, then we'll get additional equity into the deal. So if we did have like a startup car wash, it would be 20% down, bank at 50%, SBA at 30%. Next slide. What qualifies for a 504 loan? Has to be a for-profit business. And then in terms of real estate, SBA's definition of owner occupancy would be 51% of the space if it's an existing building, and then 60% if it's new construction with plans to get into an additional 20% within the next 3 years. Size standard, pretty liberal, probably looking at companies with 100 million in revenues and less. The business has to have a tangible net worth of less than 15 million, average after tax net income of less than $5 million. What are the eligible project costs? Basically anything fixed asset related except for rolling stock. So our typical project would be the purchase of a building plus renovations, deal size $500,000 to $20 million. Sweet spot is probably right around $1.5 million to $2 million. Ineligible project costs, we can't do partner buyouts, goodwill, working capital, inventory, franchise, stuff like that. Next slide. So most of our fraud, and this one evolves too, I'm looking at this and seeing like, is this still right during COVID? 504 borrowers are usually businesses that are looking to expand and kind of fix their overhead. And, you know, right now it's a little bit weird as liquidity is everything, I think, at the business level. And a lot of our customers did receive PPP funds, idle funds. And I think the 504 in some ways kind of helps with more, if those programs were relief-based, 504 is more recovery and resilience. With businesses able to secure their property, they're more invested in the community, they're able to fix their overhead, and with the refi, they're able to kind of cash out some liquidity and use that to build resiliency as well. Next slide. Financing terms, typically the bank's going to do 50% of the project costs. They're going to be required to do a 10-year maturity. Most of the times we'll see the bank fix it for 5, do a 10-year maturity, 20 or 25-year amort. Bank rates probably coming in 4 to 5% on average. 504 program, we're going to do a 25-year fixed rate loan. Current rate's about 2.4%. Prepayment penalty right now in the 504, because our rates are so low, is pretty much nothing. It's 1.15% in the first year, and then goes down 10% each year. So by the end of year 5, it'd be about 55, 60 basis points. Next slide. This is just some recent examples of deals. Who knows if these would still be deals post-COVID. I mean, we've seen just a huge drop-off in retail, restaurant, hospitality, and we're seeing a lot more kind of more upmarket credits now. In the hotel space, nobody's doing anything right now. So take a break on those. Next slide. The application process, the way it usually works is a broker would call the bank or myself directly, or Eric in my office, kind of chat about a deal, say, hey, I got a guy that's looking to get into 10,000 square feet in, Crystal Lake, and, how's this sound? And, we kind of vet the project for eligibility, make sure it's a not-for-profit, make sure they're going to occupy the total space. And then we put together an estimate sheet, which I think we include later in here. We work in tandem with the bank on our underwriting. In some cases, it might be beneficial to the bank to have the Somercor approval in place before they go to their loan committee. And then the bank basically funds the deal on an interim basis. And then we come in 60 to 90 days later and pay them off. That's when the interest rate is locked in. Next slide. For the 504 benefits, like I said, 90% financing, below market rates, preserve working capital, and businesses that are expanding probably want to put as little money down as possible just to build resiliency, more working capital, more options, more choices. And especially with COVID, there might be opportunities for expansion, acquisitions, things like that. So I think liquidity is key at the business owner. With Somercor's background, we're experts in the industry. We do some other city-based programs, but 504 is our bread and butter. And like I said, I've been doing this for 25 years, so most days I know what I'm doing, although the SBA definitely throws us curveballs. As any of you that have been involved with PPP can see, we're on probably like the 23rd interim final rule, which is just a joke in a way of having so many final rules that are never final. We have a bet in our office of what that number is finally going to come in on for our revisions in PPP. Next slide. So here's an example of a straight building purchase. This is probably the only one I'll go into in detail because these are way too small numbers to be looking at early on a Friday morning. Typical $1 million purchase, bank said 50%, 500,000, SBA 400,000, borrower equity at 100,000. There's approximately 2.6% in fees that are added to the loan amount of finance, which, given our interest rate at 2.4%, no one really cares about. Next slide. Next slide is an expansion refi deal. In some cases, if somebody was getting a second location, we could use the equity in their existing location towards their down payment for the new location. Next slide. Okay, this is kind of a good one. The 504 debt refi program has kind of had a roller coaster ride where after the financial crisis of 2008, 2009, SBA offered a temporary refi program for the 504 loans. At first, they really got it wrong. The box was too small. Nothing was eligible. They maybe did 50 loans nationally in the first 2 months. So they said, okay, this is ridiculous, made it a lot better. In 2016, they made the 504 refi program permanent. And we're seeing a lot of interest in that as businesses roll from PPP idle to more of recovery and resilience building. The 504 refi is a good vehicle for that. The loan has to be 2 years old. The next one's kind of the big challenge right now is the loan has to be current for the last 12 months, no 30-day late pays, and no modification to terms, no deferments. Again, these rules were written in 2016 before anyone thought there would be any kind of crisis like we're in now. We're expecting some relaxation on that deferment rule, but nothing yet. And I'm waiting for some guidance on specific deals too from the SBA. So right now, I'm kind of pitching the refi program as a good vehicle, but they have to be current and not have taken a deferment. So that's the challenge with that one. With a 504 refi, we can go up to a 90% LTV. If they're going to do cash out, we can do an 85% LTV with no more than 20% cash out. Can everybody tell I had my allergy medicine and caffeine today with how fast I talk? Next slide. It's just an example of a permanent debt refi where they're able to use their equity and provide cash out for operating expenses. Next slide. Recent 504 program changes. It's been, I think, 12 to 15 months now since we've had the 25-year debenture, and what we've seen is just everyone's gravitating toward that. And that was really a response to the SBA 7A program offering a 25-year deal, and the 504 had to match that. And then also with the CARES Act, what that did is any existing SBA borrower, whether it was 7A or 504, was able to get 6 months of debt relief under section, it was 1112 or something like that. So SBA made their payments for 6 months. For 504 loans, that started with April. So October, they'll come back from that debt relief. There was also an opportunity where any new deals that got approved and were funded by September were also able to qualify. So I had a couple projects in March, April, May that we got approved, and now we're getting the debt relief once they fund. I don't think there'll be any extension on the debt relief. I think we'll probably see some enhancements to the 504, maybe in terms of fee waivers or something like that. And next slide. Okay, that's it. And that's my partner, Eric Bacon's contact information. Dan and Mark certainly have my contact info as well. You can find it on our website. I'm on LinkedIn, everything like that. So, I would encourage everybody, if they have a question about a deal, reach out to myself, Eric, Mark, Dan, and, we could walk you through it. Mark and Dan and other people at ACB are really experts on this. Like they said, they've been doing it a long time. Mark's on our loan committee. He knows what kind of deals work, knows what doesn't, and that's a wrap for me. So I'd like to open it up for any questions. And again, apologizing for talking so fast and covering so much so early.
Let me just jump in quickly. We are recording this. We will be posting this on Heartland's YouTube page. So I want to make sure you know that in case you need to know that before you ask your question.
You mean I'm going to say bad things?
Not you. I mean, the questions that may come up. I want to be clear that this is being recorded to people asking questions.
So I'll be a YouTube superstar after this.
There you go. You and me both.
One quick comment before we go into the questions. Brian mentioned the PPP loans. Obviously, that date got extended on applications out until August 8th. The bank, we did fund about $220 million of PPP loans around the area. We're still taking applications. I think we did just under 1,000 loans. So if you do have customers that are frustrated, can't get help from the big bank, Dan and I can assist in that. And then on top of the 504 platform, we do have a certified SBA lender on staff. He's worked with our group here in McHenry County. His name's Matt Horst, and he does live in that 7A world, which is another SBA option to assist. It can be assist in working capital. It can be assist in building purchases. It's just another layer of financing options if we need it. And we can also do it in unison with the 504 program. So with that, we'll open it up for questions.
I did mute everybody, so you'll need to unmute yourself to ask a question. Tom?
I do have one. Will this work on a package deal with building and business equipment, trade fixtures, etc.?
It will. Brian, do you want to talk about how the blended amortization piece would work on that?
Sure. So if the majority of the proceeds are going towards real estate, we would probably still do it as a 25-year deal. So the equipment involved in the acquisition, if it's used equipment, we would need to get an appraisal on it to make sure that the values are supported. If it's new equipment, we don't need an appraisal. But let's say somebody was buying a building for $1.5 million, another $200,000 for equipment. That's fine for us. We would be in a second on both those assets and still do it as a 25-year structure. It gets a little bit tricky if it's a business acquisition and there's real estate and equipment, and there might be a goodwill component. Then we have to make sure that the 504 structure is really limited to the fixed assets and supported by an appraisal.
Okay, thank you.
Brian, Dan here real quick. What type of equipment is eligible versus non-eligible? If we could just so our folks on the call here know that.
So most industrial equipment is going to be eligible. The things that SBA has a problem with would be rolling stock. So any titled vehicles, things like that. Construction equipment that goes on a trailer to a job site, that's fine. Things like equipment rental companies that are renting out equipment that's more inventory, that doesn't work. The equipment that we finance does have to have a useful life of at least 10 years. So it tends to be more industrial, less tech, less small stuff, more kind of bigger, high value stuff.
Is there a minimum dollar amount?
That's the wrong question. I like, is there a maximum dollar? All right. Generally, I would say in terms of our fee structure, the smallest project we'd probably want to look at is about $300,000. We've done deals less than that or projects less than that. It's just our fees get kind of expensive. So if somebody was buying a building for $200,000, if such thing exists in the Chicago metro area, our fees might be like 8 or 9 points on our deal. So we could do it, but I want to make sure we are very transparent in what the costs are. And maybe that minimum project amount goes down with kind of how low our rate is right now and the risk environment in lending.
And that goes the same for equipment financing?
Correct.
Okay. You guys are letting them off easy.
Their heads are spinning from my fast rap on 504.
I have a question on the blended rate. If you could explain that to help dispel some confusion on the subject, because you were talking about the rate, the SBA rate, and then the bank rate, and there's really two different loans here. Is that not correct? And then they're being amortized separately,
Yeah.
but there's one payment. Can you?
Sure. So the blended rate I tend to kind of punt on because unless the bank is fixing it for 20 or 25 years, I don't know what that adjustment is in year 5. So if we look at just like the structure that I had where the bank's at 500,000, we're at 400,000. If our rate's 2.4% and the bank's at 4.5%, it just basically be 5/9 bank, 4/9 SBA times the rate. Your blended rate's probably somewhere around 3.25, 3.5. So I generally try to avoid that blended rate because I'm like a really big finance dork, and I know technically it's not correct if I talk about a blended rate unless I know what that reset is.
Bruce, on the bank side, give you an idea. So if we were to engage in a deal today, let's say it's a 4% rate, we have to match the 10-year term at a minimum with the SBA. So our deal would be a 10-year deal with up to a 25-year AM on the bank side. There could be a rate adjustment inside that 10 years, but you wouldn't have to refinance or do anything with that bank note for a minimum of 10 years. The bank does also offer some longer term fixed rate options for new clients or existing clients, whether it's we hold it on our balance sheet or we can go out to the swap market today and offer upwards of 15-year fixed rates. And so at the end of the day, yeah, there would be 2 payments. You would have a payment to the bank, and then you would have a payment to the SBA. A lot of times what ends up happening is if people want to prepay, they're typically going to prepay the bank's first mortgage simply because the interest rate is historically been higher. And it's all how we fund deals, right? We're funding with core deposits, you know, in our own liquidity, and the SBA is going out and funding with bonds, and that's how they are offering those longer term rates. So we could help you ultimately give a blended rate scenario, but yeah, there is 2 loans, 2 separate payments that would occur throughout the life of the loan.
But 40% of it, the SBA portion, is at this rate that's unbelievably low, the 2.3 or whatever you're talking about there. Is that correct?
That is correct,
I mean,
yes.
that's one of the reasons that we wanted to ask you guys on today, was to make sure that the commercial brokerage community understands how low the rates are right now. They're unbelievably low. I don't know if they've ever been lower.
Yeah, we've had to say lowest rate in history, I think at least 3 or 4 times this year. But when we priced yesterday, that was the lowest rate in history by about 18, 19 basis points. Yeah, it's incredibly low and just super cheap money right now.
The other part, Bruce, to that point, which is kind of interesting, looking at it from a real estate value approach. Let's just run a scenario where interest rates bounce back here and the economy, you know, comes back quick after COVID. That SBA loan is also assumable. So in a scenario where you're trying to sell a property down the road for your client, you could actually sell them on an income approach that they could assume a 2.3% rate for whatever's left on that deal. So the bank could come in and refinance the first mortgage, and you could actually package up that SBA rate with the property. So if rates are 8% and you could finance some portion of the purchase with a 2.3%, 20, you know, so there's 18 years left on the debenture. It's a nice add-on to that particular property.
That would be.
Can someone go into a little more detail on, Brian had mentioned 6 months of payments paid before September, if the loan was closed before September. Can you go into more detail on that?
Sure. So that would be all SBA loans that have been currently funded. So any loan that was funded prior to CARES Act rolling out in March, and then any loan that was funded up until September 27th of this year would qualify for that debt relief. Now, on the 504 side, it's a little bit different because, as I mentioned, with the logistics, the bank finances 90% initially, and then we come in typically 60 to 90 days later after the bond sale. So we're right now working on projects for the bond sale in September, as far as they're already in the closing queue. So there's no chance of any new applications getting the debt relief on the 504 side. On the 7A side, yes, because their time to get funded is going to be shorter because you don't have this bond sale on Wall Street. So if you went to the bank, if there was, say, a smaller real estate deal, a $500,000 deal, the bank might want to do that 7A because the CARES Act benefit then might go into place. But then the 7A rate's probably not going to be close to where we're at.
Okay. Thank you.
Any final questions? All right. Well, thanks, Brian, Mark, Dan. We appreciate you guys coming in and enlightening us.
All right. Thanks, everybody. Feel free to reach out